Well, India has just released its much-anticipated economic data for the second quarter. GDP grew 6.3% in the July to September period, slightly beating forecasts for a 6.2%. It is a steep decline from a robust growth of 13.5% in the April to June quarter, aided by a favourable base effect. For more, Rebecca Bunnan joins us live from Mumbai. Rebecca, how does the data reflect the country's economic health, and what factors have weighed on domestic demand?
Well, that figure of 6.3% growth for the July to September quarter was very much in line with expectations, and it does represent a sharp drop from the previous quarter when there was growth of 13.5%. Now, that's because what we're seeing in India is a wearing off of the effect of the bounce back from the COVID-19 pandemic. So April to July compared to last year was a very sharp bounce back because of those lockdown restrictions that were in place at that time, which then gradually got eased. So we're starting to see that effect of the COVID-19 recovery now wearing off and a more of a sort of a normalization of numbers. But there's the fact that analysts and economists are predicting that they do expect something of a slowdown in growth now anyway because of other factors, external factors, and also the fact that India is seeing this high inflation that's still an ongoing challenge, and it's been raising interest rates as well. And these are factors that are likely to potentially hit consumer demand. And at the same time, there are these global headwinds as well, the potential of a slowing economic growth next year, which could weigh on India's growth too, as it could impact exports. So the number looks quite impressive when growth is more than 6% by global standards. But for India, it really wants to be seeing numbers that are much higher than that, upwards of 8%, because it does have a large young population that it needs to put into employment, and also it needs to lift a lot of people out of poverty. So these numbers are much lower than the country would like to be seeing.
Okay. Rebecca, briefly, Goldman Sachs recently cut its forecast for India's GDP growth next year to 5.9%. And we also understand that India's finance minister has made some comments today. Very briefly, what is the sense we're getting from her?
Well, Nirmala Sitharaman, India's finance minister, has made some comments, and this comes ahead of the annual budget, the next annual budget, which will be presented on February the 1st next year. That will be critical because it comes ahead of an election year in 2024. And Nirmala Sitharaman has been saying that in order to boost India's growth and to maintain high levels of growth, the government does plan to increase government capital expenditure. That's likely to help boost the economy, also helps to create jobs. So that's going to be very closely watched ahead of that budget coming up next year. But she also said that it's very hard to predict growth over the next couple of years, given the fact that there are so many external factors, and that's what economists are warning about at the moment, the risks of economic growth slowing globally, and that could impact India in turn. And also, of course, the inflation remains an ongoing challenge for India as well, and its domestic demand.
Yeah. Well, thanks for that, Rebecca Bunnan, reporting live from Mumbai.